The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Token sale platform CoinList raising $100 million in its first equity round in nearly 2 years at a $1.5 billion valuation. Joining us now with the details is CoinList CEO Graham Jenkin. Good morning, Graham. So a lot of crypto companies are raising money right now. Is there a sense that you just have to raise money while it's hot? Or, I mean, tell me a bit about why do you need this raise?
It's a good question. At least for us, we've just seen a dramatic amount of growth in the last 12 months. At the end of last year, we had around about 150,000 monthly active users. And right now we're in the 3.5 to 4 million monthly active range. So we've just seen dramatic growth. And in order to keep up with that growth, we need to scale operations, scale on the engineering side, on the support team side, really try to create a great experience for our users. Because we're definitely catching up to that growth right now. So that's a big part of the reason why we need to raise.
Is there a sense, though, that the money is hot right now, and so just get the raise done now before another, bear market comes or there's a crypto winter?
Well, if we thought that, then we would have raised $420 million. So I think, for us, it's really more about, we're already profitable. We're already kind of in a pretty good position financially, but we just really need to try to accelerate the speed at which we grow, and that's why we're doing the raise.
So, Graham, with the Series A, you raised it from investors who had previously invested with you. It seems it doesn't seem like you went outside of that pool. Why not? Normally, when a company does this, they try to bring in investors who might help leverage and their other portfolio holdings and help you guys out. But this was just taking in the cash. Any reason why?
It's a great question. We did initially start to talk to VCs outside of our core existing group. But then we realized that we have a really large investing community already on the platform. And these are folks that are in the regions where we're growing the fastest. These are the folks that essentially brought us to where we are. And so part of what we wanted to do was give those folks the opportunity to ride along with us and with our success. And also, even though we're a centralized entity, we're trying to view ourselves as a bridge to a decentralized future. So we wanted to have a much broader community of investors participating in the regions where we're growing fastest with a global footprint. And so that's part of the reason why we raised this way.
So CoinList is a really fascinating phenomenon because it does have some echoes of the ICO era. And so I guess, I just would be curious and we know that quite a lot went wrong with ICO. So how do you avoid some of those same things happening again? And how do you choose the projects? I mean, what kind of standards, because you're dealing with a lot of newer, more unknown projects. So how do you decide what projects are appropriate?
Yeah, that's really good questions. The 2017 ICO era is definitely dead, but token sales, token distributions have really evolved since then, and we've evolved with that, and in some cases have led that evolution. We've definitely seen a lot of teams now moving away from using a token distribution as a capital formation event, and they're using these events more to build their communities. So the teams that we're working with now, they're raising less amounts of cash. And it's really more about, again, just bringing in tens of thousands, in some cases, hundreds of thousands of users getting visibility to their protocols. And then, frankly, that's what these teams need in order to be successful. As you guys were saying earlier, capital is relatively cheap out there these days. But what VCs aren't able to bring is a broad community of tens or hundreds of thousands of users. So that's part of what we do, and we've evolved again with the ICO market from that standpoint. In terms of what process do we use, we tend to run our selection process almost like an early stage venture fund. So we use the same kind of processes that you might see in a fund, where we're sourcing deals from our investor network, and then we're evaluating them in the same way that you may again at a fund. We write up investment memos. We're evaluating these teams based on the team background, the traction that they already have in terms of what product they've already built, the size of the community, what market are they in? Does the market make sense? Do the token economics make sense? And we have the equivalent of an investment committee that meets weekly. So again, we run it like a early stage venture fund, and keep that quality bar higher in terms of the projects that we end up listing.
Couldn't you also run into what would seem like a good problem to have, is that you are kind of have so many users, but like, will all these users be able to get a piece of the action, right? Like that, it seems like you're kind of getting into that territory now, right? Where you have like almost too many users and, not enough opportunity. How do you deal with that?
That's an awesome question. It's definitely a big challenge for us right now. Just some high level numbers. We're kind of seeing 800,000 users attempting to participate in these distributions when there are 10, 20, 30,000 spots available. So we're definitely seeing that kind of situation. Part of the way that we're dealing with it is by trying to create greater opportunities for those users that have demonstrated value add to projects in the past. And right now we're doing that through a product called Karma, which is almost like a loyalty program. So we identify users on the platform that have participated in sales before, validators, developers, folks that have participated in hackathons on CoinList, folks that are active in staking. So those individuals that end up adding the kind of value that a lot of the protocols that we work with need, we end up prioritizing those folks via the queue system that we have and via CoinList Karma. So that's part of the way that we're trying to address it. But yeah, it is a big problem, and we're still working on trying to solve it.
And just quickly, I want to talk to a little bit about your global prospects. So from what I understand, you're available in most countries, but not to citizens of the US and China, right? Because of KYC. And just kind of where do you see the largest growth coming country-wise? And also, I noticed kind of an interesting statistic. It looks like you're growing quite a lot in Japan. So Japanese regulators are cool with your product. I was sort of surprised to see that, because Japan is famously very strict about this kind of thing.
Yeah, we as you guys know, we got to start in the U.S., focused on U.S. accredited investor offerings back in 2017. So regulatory compliance is very core to the way that we operate. It's very core to our DNA. And in any jurisdiction where we have licensing requirements, where we need to go through licensing processes, we do that. So again, it's very core to how we operate. We're definitely growing globally. Even in the U.S., just a lot slower, but growing globally, and Eastern Europe, Turkey, Russia, et cetera. A lot of growth there. A lot of countries in Asia, definitely seeing a lot of growth there. So it's pretty much a global footprint that we have in terms of growth.